Maverick traders, welcome out to your currency recap. It is September 23rd. Corey here with you. We're always going to take a look at meaningful news. There was some disappointing fundamental reports out of Europe. We'll talk about that. We're going to talk about what sectors of the market look most interesting, be that in crypto or maybe Forex currency pairs. And we're going to try to match up the best with the worst and find the best risk-reward opportunities.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so let's go through a couple of different things here today. First of all, just in terms of the news of the day, markets are now pricing in for the first time another 50 basis point cut. Fed fund futures are pricing that in. Basically, markets expecting more cuts coming and deeper cuts. The expectation was if they did 50, they'd probably only do 25 in the future. Now that's changed. 50 and another 50 coming. But like we talked about, more cuts are coming in the future most likely. European PMIs really disappointed. German numbers missed. And you can see we're in really contracting economic circumstances. Anything sub 50 on a PMI is a slowing economy, is a weaker number, and down in the 40s for Germany in the manufacturing PMI, French services PMI at 48 versus the 53 expected. Really disappointing numbers, and that's why the euro got hit. I mean, it was a bad economic day for the euro. That reversed some strength that the euro had been in for some time and really puts it as one of, in terms of our velocity, we'll talk more about the euro and that downside momentum and downside pressure that it has. So still a little bit more risk on. You can see Aussie and Kiwi still on the upside. Euro, US dollar, Japanese yen, some of these more defensive currencies underperforming. Crypto continues to do well. Equities continue to do well. Oil gave back some ground, down almost 1% today. As we dig a little deeper into crypto, Ethereum has the best velocity. We'll look at that chart as well. But if you're thinking about buying something crypto related for the next short-term trade, Ethereum's got to be at the top of that list. Now, if we look at equities, it is a bullish market environment. We don't have, the moving averages are still sloping a bit sideways, but give credit where credit is due. The markets have broken out above this resistance zone. They did so on a gap, a powerful move. We're consolidating a little bit the last couple of days, but we would still anticipate this is not a good short setup, let's put it that way. Now, if you were to plunge back and kind of have a false breakout, well, that would change things, and that would have a more bearish setup. A false move would come a fast move lower, but I'm not necessarily expecting that. We've cleared resistance. We did it on a nice gap higher. My guess is that there's a bit more upside before this thing's all said and done. So as we look at the economic data, this is what we have so far. In the red. It doesn't matter if it's German, UK, even here in the US. Manufacturing PMI in the US this morning, 47 versus the 48.6, and that is pushing the markets to expect a deeper interest rate cut is coming. Tomorrow we've got it's really overnight. We've got Australia and the expectation that they keep rates unchanged at 4.35%. The rest of this week we've got the Swiss National Bank, which is expected to cut by 25 basis points. We get final GDP numbers out of the US on Thursday, and then we get core PCE, which is an inflation gauge out of the US here. We also have Powell speaking on Thursday, and quite interesting the way that we went from expecting a lot of interest rate cuts to no interest rate cuts, and now all of a sudden the interest rates coming fast and furious, and he'll talk more about that, no doubt. And on the currency analysis side, here's what we've got for velocity. Really, here in the middle are probably currencies to avoid. There's not as much momentum. I think on the long side, you're looking at buying Ethereum and crypto, or the New Zealand dollar looks the best in FX. On the bearish side, euro has reversed hard, Japanese yen still on the weaker side. So that's my area of focus. That's where the momentum is. Let's take a little closer look at a couple of those charts together. So we'll start with Ethereum. As we look at this from a velocity perspective, I mean, you can see the upward trend that we've been on. RSI, buy signal, upward sloping moving average, still making new highs. And if we were to do a chart over chart comparison of Ethereum to some of the others, this one recently broke out and it's still making new highs as we speak. That's just a better, stronger chart. So for one reason or another, the demand is there for Ethereum. That's the one that has the momentum. In currencies, I think the New Zealand dollar is the clear favorite. Notice again, upward slope, buy signals, new highs. These are all classic signs and characteristics of something that continues to want to go higher. So that hasn't always been the case, but here in the last little while, you can see how the New Zealand dollar has taken on a leadership role. So if we're buying New Zealand dollar, well, what are we shorting against it? I think it's one of two currencies. You can short the yen, so you could buy New Zealand dollar. Basically, you're buying the pair NZD JPY, right? You're buying New Zealand dollar. That gets you short the yen, or you can short euro kiwi. But this one, the first one, again, Japanese yen, downward slope, sub 50, which shows weakness on a sell signal. Is it stable here? I mean, you could argue this isn't a runaway. It's kind of consolidating of late, but ultimately certainly checks the box for more bearish in the Japanese yen. And then same thing here in the euro. This is one that has a little more momentum at the moment. You can see the reversal on the PMI data would turn into a sell signal, downward slope, and I'd expect even within bounces and consolidations, there's just more downside likely coming. Is the market going to have to price in more cuts out of the ECB? The ECB is kind of surprised and didn't cut as aggressively as they perhaps should have, I guess you'd say. And certainly with the economic data coming in very, very weak, I think there's more cuts coming out of the ECB, probably the big cut coming at the next meeting. And so the euro has to price that in ahead of time. I would think the euro has quite a bit more downside. It would not surprise me if a couple of weeks from now we're really looking at the euro having broken these levels and gone considerably lower, down to 1.32, then 1.31, and so on. I think lower numbers, lower euro is coming for the foreseeable future. So that is my single favorite short at the moment. Short euro, long New Zealand dollar. That's the pair. Risk on and equities continue. So SPY is going up. That does nothing to disturb that currency pair. And economic numbers really coming in disappointing, especially in Europe. That further fuels that euro downside. So I just like how it sets up fundamentally. Technically, it works well with the trend in equities. Just you've got a lot of good things all converging together to make that a pretty good trade setup. Hope you enjoyed today's currency recap. Have a great week, everyone. We'll see you next time.